Native-born workers have gained over 2 million jobs under this White House, while foreign-born workers have lost more than 500,000. This is a sharp reversal from what we saw during the Biden years, when most job growth went to illegal immigrants. Because when you're rebalancing the global economy, there are going to be bumps along the way. But just like Liberation Day, that sell-off that we saw earlier this year, the message is simple. Don't panic. Stay the course. And I think that a good point is made by the Treasury Secretary that some of the data we've, talked about reliability issues, revisions, when you get them, the state of the overall economy. And the president himself also said, Brian, you've got to wait for these manufacturing jobs to come in. But when they do, they're going to be part of the engine that drives this economy. So if we've learned anything under President Trump, it's that you can't panic.
Yeah, I agree with that, actually. That's my biggest thing. Panic was a bad idea in April of this year. I think panic is a bad idea now. I tend to agree with Scott Bessent. I think that the fourth quarter lines up pretty well in many ways. You talked about capital expenditures. Joe Lavorgna, who's a counselor to Scott Bessent and the president of economics, has pointed out that the growth in business investment expenditures in the first half of this year was huge, okay? And it does take a while for that to bear fruit. So I think the fourth quarter could be good. I think next year could be good. There's a couple of X factors out there. There's no question about it. Interest rates are one of those X factors. I don't think it's a panacea. I don't think a half-point cut is going to be magical. I don't think a quarter-point cut is going to be magical. I think a little bit of settling down on the tariff front would help a lot, too. The Supreme Court looking at these tariffs now doesn't help with that. So hopefully we get something on that fairly quickly. But I do think there's a lot of juice in the economy. You have the big, beautiful law. They're calling it something else now. I can't remember what they're calling it. The big, beautiful law, it has good tax juice in it, and that's the most important juice you can give to businesses. We'll talk about hiring. On the hiring front, I think that's a bigger lift there because you've got the interplay of AI, and you've got these companies who are looking at their margins, and not hiring is one way to kind of help with their margins. So there are some mixed signals in there, but I do think Scott Bessent's right, and I think panic would be a terrible idea right now.
Okay, let's dig into some of those numbers that we were talking about the native-born, the foreign-born, and I'm just going to throw government jobs in there as well, because under the Biden administration, government jobs would actually be what consistently took the number higher every month, and government jobs are now going down. We've seen the Doge effect and all of that. For voters who voted on an open border and said they wanted the border to be shut down, Jonathan, they're seeing some results here. But the left will argue that's going to be a big problem for this economy overall, especially for businesses as well, because the native-born workers, you have to pay them more.
Well, look, I'm glad to see the government-oriented workers, those going down. Disappointed to see the manufacturing and construction numbers going down in terms of jobs. But to Scott Bessent's point, look, this isn't built in a day, and you don't just create all this manufacturing capacity in just a short period of time. So I'm wanting to be an optimist. Let's see it. Let's see this economic golden era that we've talked a lot about. And Brian, what worries me a little bit is the inflation expectations. They should be going down, but they're actually went up in August. So consumers, investors...
You're talking about the New York Fed survey.
Exactly. So consumers, investors are actually expecting higher inflation, even after all of the president's efforts to bring rates and inflation down.
And we don't know what the impact, Dagan, of tariffs will be. We're still waiting to see it. We've watched the numbers. We haven't seen it necessarily, but we do hear from some companies that it's been an issue for them. And the prediction is if tariffs do move forward, who knows what the Supreme Court will do, that there's potential there to change the game a little bit.
I think that we do know the beginning of what, and it's not just tariffs, it's the trade policy. What the impact is. The Wall Street Journal over the weekend, looking at the jobs numbers for last month, noted that industries with high tariff exposure shed workers. Manufacturing down 13,000. Overall manufacturing jobs declining by 38,000 this year. Wholesale trade down 11,700 last month. Transportation equipment manufacturing losing 14,500. And to Scott Bessent's point, the Treasury Secretary, he's talking about the U.S. economy is going to take off by the end of the year, that there's going to be a substantial acceleration by the fourth quarter. Well, if the economy is in such great shape, why are you so desperately calling on the Federal Reserve to cut interest rates? a frank and honest assessment of what is going on. Tell the American people that the tariff regime, the trade regime is tough on economic growth. We need lower rates to get through this difficult period for the American people. That it's a tax that someone is paying, and it's a disruption in imports of goods that businesses do need, even if they're ready and willing to pay those tariffs. Hiring is uncertain. There are going to be some job losses. There's going to be a slowdown in business. It's going to weigh on the economy, even though we believe this is great policy in the long run for America. But we need lower rates from the Federal Reserve in the short run as this transition happens. You're not hearing that. In the meantime, here's what's going on. Bank of America reports small business hiring has fallen almost 7% year over year this year. In the first half of this year, small business bankruptcies among farmers and fishermen have hit the highest level since 2020, since COVID. Trucking bankruptcies are spiking this year as tariffs hurt. I could go on, but because I'm not going to use anecdotes. People accuse me of whining, so no anecdotes here. But the data is telling you, and what the administration is saying is telling you, that the economy is weak enough because of their tariff and trade policies that they are desperately crying for Jay Powell to cut interest rates.
Okay.
Did I pop in here?
Yeah.
Great point, Stegan, as usual. You know, I pay attention to taxes, right? And I'm looking at the one big beautiful bill, the one big beautiful law. What are we calling this thing now? Okay, it's no
There
tax
is a
on
new
tips.
name for it. I can't remember. It's like the Working Families.
Wait, that's it.
Something.
No tax on tips, no tax on overtime, no car loan. You can deduct car loan interest, no taxes on Social Security. On the corporate level, of course, it's capital investment write-offs, more generous R&D expensing, interest deduction write-offs. This is a growth bomb that's about to go off. How long it takes? It may not be a tomorrow thing. When he says fourth quarter, I think, wow, you're thinking this is fast.
I
I'm
think
not
that
sure.
too.
Do you?
I was surprised by the prediction of the fourth quarter. I would expect to see it into next year because,
Right.
as he mentioned, the length of time that it takes to be able to build a manufacturing facility for those companies that are investing to hire to get off the ground. I was surprised by that, unless he's predicting that basically to Dagan's point, because he's like, we know rates are going to come down. And so that will be what stimulates for now.
There's also $158 billion that's coming in tax refunds for Americans, and that money is going to go right into the market, right? I mean, people are going to spend that dough, and that starts in January.
And Jerry, what I bookend your comments by saying, in addition to tax cuts, it's regulatory reform that really needs to be put in place. The president has done some excellent things when it comes to fossil fuels, for example, energy, but we just know from history that the most prosperous economies, the most rich economies, are always the most free economies. So everything the president can do to make our economy the more free, I think it'll be the better off as a result.
And I was just going to note, what does it do? What does the new tax law, this bill, what does it do to inflation? Because inflation expectations are still elevated to where they were pre-pandemic, quite a bit so. They look contained, but they're still much higher. What, 2.5% 5-year, roughly, inflation break even. So what does that do, coupled with, you have higher labor costs, which is great for paychecks, but you couple that with the trade policy and the immigration policy. It's, labor is hard to come by.
Well, you get this kind of weird...
In certain industries.
Yeah, and you get this weird spot where the way companies have kept prices down is they've been really strict on the hiring front. You can see that in all the numbers. So inflation has been less of a problem on tariffs because companies have found a way to keep their costs down. But keeping your costs down through the year means you're not going to hire as much, and so then that shows up in a weaker labor market. So you're kind of caught in this spot where what you really need is a whole bunch of certainty on tariffs, a whole bunch of that tax juice to come through the economy. So companies say, all right, I know what I'm paying. I know how I'm growing. I'm going to hire people to make
Can
it
I
happen.
throw one-
And that's kind of a Goldilocks thing.
One more on the list, that would be maybe some cessation of government spending as well. The Trump administration is spending something on the order of $200 billion more than the Biden administration did at this point in their regime. So let's have all of these cuts and watch the economy soar.
That's the budget deficit this year is running higher than it was last year, and that's one of the reasons that assets are inflating across the board.
Hey, big spender.
Because there is a lot of stimmy
Right.
going into the economy.
And you've also made the point that the administration then is relying heavily, because of the spending that's happening, that they were not able to curtail in the bill, on the tax revenue, the tariff revenue, to offset that. If all of a sudden something goes haywire in their plan and that revenue isn't there, we do have a substantial problem. We'll have a big shortfall. All right, let's take a look at shares of Tesla today. A new report revealing the company's share of the U.S. EV market fell to just 38% in August. That was compared to more than 80% when it was at its height. This is the first time in almost 8 years that Tesla's market share in America has fallen under 40%. And we've talked about this ad nauseum. And Elon Musk is talking about ways to reinvent that company. He's focusing on robotics. We've discussed that, whether it's a winning strategy or not, because right now, at least for the EV business, they've got issues.
Is he sleeping on the factory floor these days? I think they need him to pitch a tent on the factory floor until they get a new model or something, because it just seems, I don't know, I'm not an EV guy, but it seems stale to me.
I keep saying this, but is he bored with it?
Yeah.
Like, somebody needs to go in there and Toyota that bad boy.
Well, and remember, it used to be there was like 7 internet companies. You had Yahoo, Google, Cisco. Those were the so-called internet companies. Then we realized somewhere around maybe 2003 that every company was an internet company. Similarly, from my perspective, from Tesla. Tesla used to be the EV play. Now, all of these companies have EV options as well, so that price
a lot more
valuation
competition.
has come down quite a bit.
And the competition from China.